Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, yesterday's fall on the Nifty took the index to a one-month low. And while all the sectoral indices did end with the losses, the ones that really put most pressure on the index were IT, FMCG and pharma. In fact, it was the Nifty IT index that was down for the third day in a row, tracked mainly by the TCS stock as well, following the big block deal, which fell the most since August of 2022. Now, Infosys and HCL Tech also contributed to huge losses on the Nifty. The big question then is that will the Nifty be able to bounce back from the one-month low that it hit, especially on the bank index, expiry this week as well. Good morning to you, Shail. What do you expect as far as the Nifty is concerned? It slipped below the 50 DMA for the first time in 4 months. What does it mean for investors at large?
Good morning, Sakshi, and a very warm welcome to all our viewers who are joining us on this fine Wednesday morning. Sakshi, I think you've encapsulated all that was there in the Nifty. Let's move on.
Okay. Now, when we compare the fall on the Nifty, Shail, the Nifty Bank has been still resilient when we talk about absolute terms, although that also continued to grind lower and the index fell for the 8th day in a row. How would you really see the Nifty Bank really poised to move forward from here, especially today when it's the expiry session?
Yes, actually, I think you've mentioned all that was there of importance in the Bank Nifty. Let's move on.
Okay, and the Nifty Bank has also corrected 1,600 points in this last few days of a fall is what the Nifty should know. Anything in the F&O space, Shail, that you want to point out?
I would imagine, Sakshi, you'll cover them in stocks and news. Let's wait for them.
Okay. Let's talk about the global cues then. As far as the Wall Street is concerned, the three major indices closed higher on Tuesday after the shares in hotshot chip maker Nvidia shook off the early losses and investors looked ahead to the Federal Reserve's policy meeting. Remember, the FOMC's two-day meet began on Tuesday night and the decision comes on Wednesday night, to which our markets will react on Thursday morning. So that's going to keep the markets, on the edge. In fact, when we talk about the US markets, they recovered from the losses that they had been posting. So the Dow Jones ended about 0.8% higher in trade. We did see the Nasdaq also inch up higher and ended at 16,166, about 0.4% of an uptick is what we saw there. S&P 500 also gained about 0.5% of gains. As far as the Asian markets are concerned, again, they were trading higher in the early trade today as investors digested the Bank of Japan's landmark shift in the monetary policy while awaiting the US Federal Reserve's interest rate decision as well. So be it the Nikkei that was up 0.6%, the Kospi that was beginning about 1% higher, the strongest of them all, about 0.3% of gains coming in on the Hang Seng, and Shanghai about 0.16% of gains coming in. Now, as far as the trends on the GIFT Nifty are indicating, they are indicating a positive start for the broader index in India with gains of about 62 odd points as well. Now, as far as the flows are concerned, the FIIs, they bought shares worth about 1421 odd crore rupees of shares, while the domestic institutional investors, they purchased about 7,449 odd crore rupees worth of stocks yesterday. Of course, this number looks skewed also because of the large TCS deal that we actually saw unfold yesterday as well. A lot of other stocks also you need to keep an eye out on. So Aditya Birla Sun Life AMC, the non-retail portion of the OFS or the offer for sale got fully subscribed, and the promoters are going to be exercising the green shoe option as well of the OFS. 4.47% is the green shoe option of the OFS. Of course, apart from this, there are other stocks that you need to keep in mind, especially from the pharma space. So it's Oro Pharma that's got the US FDA approval for Momstone Furoate monochromide nasal spray. And this spray is used in the treatment of nasal symptoms of seasonal allergic and perennial allergic rhinitis, and therefore it's going to be reacting to this news. TCS, of course, after yesterday's big block deal, we will see how the stock really shapes up. It did fall about 5% in trade yesterday, and we'll see how the stock performs. There's another news flow that selected by a central bank, the company which is a leading Midwest regional bank in the US, that's going to be modernizing its core technology using its BANCS model. So again, some positive news of tie-up coming in. Yes Bank is going to main focus. It's concluded the transfer exposure of Bank of Katira India Private Limited to Prudent ARC, which is an asset construction company, for 203 crore rupees. So some positive coming in on that one too. IFCI, that's going to be in focus. Here the board has approved a preferential issue of equity shares to the government of India against a capital infusion of 500 crores for FY24. The government currently holds about 70.3% stake in IFCI. Also, Star Health is going to be in focus. Here, ICICI Prudential Mutual Fund has acquired 0.6% stake via block deals at an average price of 540 rupees per share. Also, LT Foods is going to be important to watch out for. Sunil Singhania's Abacus Asset Management has acquired 0.98% stake at an average price of 162 rupees. Again, the stock will be in focus. Ultratech Cement, that's the last stock that I'm watching out for today. And that's Competition Commission of India, which has approved the acquisition of Kesoram Cement assets from Kesoram Industries. So that's going to be important to keep an eye out on as well. Shail, any particular other stocks that you will be watching out for today?
I think, Sakshi, we'll take a look at Bajaj Finance. That one has some merit at this point of time. Although on the long side, absolutely nothing makes sense at current levels unless we see some kind of a base building happening on the Nifty. Apart from Bajaj Finance, I don't think so. Anything else catches my finance. Maybe Indigo as well. These are the only two ones.
Okay, Indigo and Bajaj Finance, right. We will keep an eye out on those as well. We will wait for Gaurang Shah, the Senior Vice President of Geojit Financial Services, also to join us as well on the show and help us understand what is he looking at as well as far as the markets are concerned, of course, after the recent downfall. All right, Gaurang is with us, I'm told. Very good morning to you, Gaurang, and good to have you with us on Business Today Television and on Market Today. Tell us, how have you assessed the recent fall in the markets? And do you think a large part of the fall is now done, or is much more going to be in the offing? That's the question that all the investors want to know.
Sakshi, and morning to you and my good friend Shail and all the viewers of BTTV. That's a billion-dollar question, isn't it? Whether the fall is going to continue or whether it is going to stall over here. So let me give you a broad perspective what we have analyzed starting Monday this week. Our view was that the markets, Nifty spot, if you ask me, Sakshi, could be seeing base at around about 21,800, 21,850 on the lower side. 22,100, 22,200 could be the level wherein you will feel a little bit of vertigo, high anxiety, top heavy feeling. And in a scenario when you are approaching the second largest election phase in independent India's history, I think history has told us that every 5 years when the general election happens, markets do take a little bit of breather, they take a break. March ending, corporates, individuals want to show as much as cash on balance sheet, liquidate their position in the market, followed by, of course, the regulatory issue with the small cap, mid cap, micro cap, stress test and how soon they can liquidate the stock in case if there is any redemption pressure, etc., etc. All of that led to a lot of confusion, and as a result, we did breach that 21,800 mark, which was supposed to be a sacrosanct level, but we have broken that, and but given a recovery about that yesterday, but decisively we broke that. So there could be pressure, Sakshi. I'm not saying that there cannot be pressure, but if you don't look at the next 2 months, 3 months, post the elections are done and dusted and the result known to us, government in place, I think there's going to be a long, durable rally that lies ahead of us. So think long term rather than short term.
Good morning to you, Gaurang, and a warm welcome on market today. I think the crux of the situation is the pain that we are seeing in small caps and mid caps. The small cap as index shaved off about 12%, the mid cap about 7%. Is the pain over, or are we in for a more hiding?
I think, given the correction, Shell, to be very honest, if you do have, that gut of withstanding the volatility that the market will throw at you, I think this is time to possibly do some little bit of bargain hunting. Where you would want to search for those bargain hunting, I think mid-cap sectorial picks would be a very logical approach rather than going into small and micro cap or no cap. I think it is better to stick your neck out and go do some selecting, buying in the mid cap sectorial stocks. If you ask me which are those sectors, Shell, I think mid cap IT, mid cap NBFCs, microfinance companies, small finance banks, public sector banks, private sector banks, autos, auto ancillary, cement, select FMCG. Though yesterday there was a lot of pressure on FMCG, but we have we are from the other side of the camp in terms of long-term investment idea. And my sense is that hospitality stocks. So broadly, Shell, I think this is the universe that you should look for in the mid-cap universe in case if you're looking for some kind of bargain hunting from a long-term point of view. I'm sorry, Shell. Good morning to you also. I forgot to greet you. Morning to you also, and I hope the day has seen you in good shape.
No, absolutely. It's always a pleasure to see you, Gaurang, and your smile itself is good morning enough. Let's just drill this a little deeper. Oil is at about a 4-month high, and across the board we see a lot of, how should I say, when you look at the grand of data, pain coming in from Russia, pain coming in from Saudi Arabia. When you look at the broader prospects of sentiment for 2024, what do you see?
Pain definitely there in terms of crude oil, and the most unfortunate part, Shell, is that 70-75% dependency on crude oil imports. We were having a gateway to discounted crude oil prices some time back, but that is now reduced. The gap has reduced to a great extent. On the other side, rupee dollar equation also, though we are below 83, close to 83, but in case if the rupee has to weaken against the dollar, then that also opens up the Pandora's box or can of worms for us. So we have two double-edged sword. One is rising crude oil prices, the other is weakening rupee against the dollar. And of course, you have the geopolitical situation in terms of global supply pipelines that can create a little bit of havoc in the global demand. Not that we've seen some significant demand coming from the global arena for crude oil, but just because of the incidences that have unfolded at the high seas, be it in terms of Somali pirates, Houthi rebels, or production cuts from OPEC plus nations, constraints or statements from Russia, all this leads to a little bit of unpredictability. My sense is that as long as we are below $90 a barrel on the crude oil front, on the Brent shell, I think we have less reasons to worry. I'm not saying that there are no reasons to worry, less reasons to worry. So let's hope it stays this way. And one good thing that I see, Shell, silver lining, of course, if you will, is that the Met Department has predicted that monsoon is going to be normal and the impact of El Nino is reducing. Now we'll have to wait and watch how the entire scenario develops over the oceans.
Okay. Gaurang, how would you really assess the impact of what is in the offing as far as the FOMC and the Fed decisions on the interest rates are concerned? On the one hand, we've seen how Japan is moving ahead, and in contrast, of course, the whole world is expecting large global central banks to move away from the hiking cycle and shift to a cut cycle. How would you really assess the impact on the markets there?
So it will be momentarily, and after 17 years of negative returns, Japan has moved a little bit from negative 0.01% to 0 to 0.0 plus positive 0.01%. It's a very minor change, Sakshi, if you go to see. Will it impact meaningfully flows into developed, beg your pardon, flows into emerging markets like India? I don't think it's going to be a very serious problem for us. And eventually, money will be directed towards where the growth is. And I don't see any pocket other than India, the way macros have developed for India, that any fund manager would want to shy away or stay away from India in terms of equity market investment, or even as a matter of fact, with the policy changes that have happened and are likely to happen when the government is in place, election done and dusted, I think a lot of foreign direct investment will also come in. So that is the problem. I'm not saying that news-based driven, you will have issues. We had a lot of reactions yesterday also. As far as the crude oil prices, like I mentioned with Shell, oil marketing companies, and you must also heard, Sakshi, that about 2 months back there was a source-based information that 10 rupees per liter cut on petrol and diesel. We saw 2 rupees happening. There is a possibility of a small further cut coming through before any major policy, any major code of conduct sets in. That may lead to a little bit of pressure, but we remain positive on the oil marketing companies as a brokerage house. HPPP IOC is on the radar. Interest rate, Sakshi, is something that we'll have to possibly take it as it comes in our stride.
Okay. Before I come to your specific stock ideas, Gaurang, and ask you to name a few, on the big block deal that's taken place yesterday on TCS, and of course we've actually seen on the street about 55,000 odd crore rupees of block deals really take place over the last month or so. What do you make of such big block deals for the larger retail investors? There are some analysts who are saying that does it really reflect stress in the IT sector? How would you really assess such a big promoter sell-off?
What I also got to know from, of course, irrelevant, unconfirmed market sources, Sakshi, was that this was a way out to save Tata Sons going public. Now, I don't know how far that is true, but even if such large blocks come into the market, I look at it as glass half full rather than glass half empty. Look at the appetite that is there in the market, Sakshi, when you have these kind of large blocks coming in, and maybe there will be further more come through in the near future. So, no, it doesn't really bother me in terms of, it's just change of ownership, change of hand from one hand to another hand is what I see it as. I don't see it as a dark spot as far as the IT sector capability of delivering in earnings is concerned, Sakshi. In fact, we are of the opinion that this fourth quarter, I think we'll see a curtain raiser very soon. April, maybe end of first week, early second week of April, we'll see the final curtain raiser for the fourth and the final financial quarter for this financial year. So we are of the opinion that there will be steady improvement as far as IT sector is concerned, and starting next financial year, that is 1st April 2024, our sense is that improvement is going to pick up momentum, and that will translate into positivity. So this entire TCS and I think other Tata Group companies going on the block, I think it is purely because of certain adjustments that they want.
Okay. Let's look at, Gaurang, the outperformers that are there in the Nifty for the month of March, despite the fact that the Nifty itself has slipped substantially. One of them is HDFC Life Insurance. It's up about 8.2% in this FNO expiry, and at the highest since Feb 15. So 1 month high on HDFC Life and 1 month low on the Nifty. How do you explain this dichotomy, and do you think HDFC Life has more legs?
So when Nifty and Sensex were hitting all-time highs, these stocks were languishing at a much lower level share. And the good thing that has happened over the last couple of months is, traditionally, historically speaking, last quarter, that is Jan, Feb, March, are traditionally time for good earnings for life insurance related companies. And we've seen those numbers also for the month gone by last, that is month of Feb. And I believe in the month of March also you will see a very decent premium earnings coming through in terms of new premium run rate. Uh, Again, basically it's the seasonality. I would possibly say it that way. March will also give you a good number. Once the 31st March date is done and dusted, we have the numbers as far as first week of April is concerned. That will throw in positivity. And that's exactly the reason why you've seen likes of HDFC Life, SBI Life, ICICI Pru, LIC, however, has cooled off from the levels that we saw, almost about 1,000 plus levels that we saw after a long time since it got listed. We remain positive, Shell. My sense is that uh, new premium run rate is going to go up consecutively quarter after quarter, and that's purely because of the sums getting insured are uh, running up, and by the virtue of that, you have higher premium outflow if you are the person who are insuring yourself, and for the insurance company, it's the net income. So, as a brokerage house, we remain positive on all the four life insurance companies.
Okay. And what would your two stock picks be at this point of time, Gorang?
So I would go with again, it's a difficult one. It's a stock market like this, Shell, to be very honest. But yeah, I mean, hospitality is something that has kind of weathered the downside that we've seen. I was looking at Indian hotels yesterday. Shell, I was, and of course the commentary from the management in terms of opening up new properties or assets are concerned. Not to forget, I'm sure you and Sakshi are familiar with the tariffs that are going on as of date, post COVID, post the new normal that has set in. So, Indian hotels is something that we are extremely excited about in terms of investment idea. And one company, if I have to look at from the infrastructure universe, was in the news yesterday, and I think 2 days back it got some orders. A company called HG Infra and Engineering. I think it is trading at about 900 or thereabouts yesterday. One stock that was holding out in the green. So HG Infra and Engineering from the infrastructure space is what we like. Both, in fact, are mid cap. No, it's not HEG. It is HG Infra and Engineering. I think you'll have to teach PCR team to correct that. HG Infra and Engineering I'm talking about. So that's the investment idea. Both are from the mid cap universe in terms of market cap.
Okay. Well, Gaurang, would you also have a view on the new age tech space again? Of course, this is again in the thick of action, Zomato and Paytm. Those two stocks is what I wanted to discuss with you. One, Zomato is constantly innovating, and now the company has launched a separate fleet for pure vegetarian food orders. And of course, we heard from the startup Mahakumbh what Deependra Goyal was talking about, how Blinkit is something that he expects to be much bigger than Zomato in just a year's time frame. And we did see the stock prices reacting, and there are brokerage houses report now which pencil the stock above 200 levels or so. That's something that I wanted to discuss with you, and then I'll come to Paytm also. So first on Zomato.
So I was wondering why it took so long for the management to say what they think about Blinkit business. In fact, Sakshi, we discussed Zomato earlier also,
Yeah.
and I'm sure you, Michelle, are one of the very active users of these platforms, be it food delivery or be it home provisioning items. Uh, and irrespective of whether you are a gold member of Zomato, if you are ordering on the Blinkit platform, you get charged delivery fee and you also get charged platform fee of about 4 odd rupees. If I have to take quarter on quarter and the usage and the number of percentage of increase is going to break even faster sooner rather than what the management has spoken about. In terms of food delivery platform, Zomato, I think it is one platform which has always been in terms of a spotlight. We've been positive on the IPO. We gave a recommendation to subscribe in the IPO at about 75 or 76, if I recollect right, the floor of the IPO. Then the stock went up to 140, 150, corrected to sub 60 levels. We again came out with the fundamental buy report at around about sub 60 levels. Currently, we are targeting somewhere close to about 175 on Zomato. So that's where we have a buy call on. In terms of Paytm, we believe that there is still pain left. We had a buy recommendation last year around about October, November. Our targets were in place at about 900 rupees. We gave a sell recommendation much before the RBI cracked down on Paytm in terms of the regularity issue. Currently, also, we are maintaining our sell recommendation on Paytm.
Okay. Gaurang, I'll ask you on Paytm as well, a little more on detail, but right after this very short break. And after this, we'll also be joined by another special guest. Just stay with us, viewers. We'll be back very shortly.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors. Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Welcome back. You're watching Market Today on Business Today Television. I'm Sakshi Batra and with me is Shail Bhatnagar. Also, we are in conversation with Gaurang Shah and we'll be shortly also joined by Mitesh very shortly. But let's quickly look at how the markets are looking at in the pre-opening trade. 110 point of a loss for the Nifty is what you're seeing in the opening. Pre-opening takes 21,726. Sensex down about 32 odd points, 71,970. So it slipped below the 72,000 mark as well. When we look at the kind of stocks that are looking still positive in this space, Bajaj Finance is ticking higher among the heavyweights. Then you also have slight upticks on Bajaj Auto. You have Kotak Mahindra Bank, which is absolutely flat. Let's look at TCS as well and see how that stock is opening again after yesterday's sharp fall, because that was the one that dragged the IT index lower in trade. So on TCS, we will keep an eye out on. We'll also look at Reliance Industries, a 0.2% higher for TCS right now, 39.85. Just about flattish trade can be seen on this. Reliance Industries, let's look at that one. Again, flattish trade, 28.52. Let's look at Ultratech Cement. There is news flow on that one as to how that one is opening in trade. And see how that one is opening. So right now you have about just flattish move, 94.59. That's the one that's moving in. Among the sectors also, I can just see flattish move coming in for most of them at this point in time. Eicher Motors higher in trade at about 3,800 odd levels, so some uptick coming in on that one. You have absolute flat trade on 2% higher for this one. ICICI Bank is absolutely flat at 1,082. Then you have Bharti Airtel that was moving strongly yesterday, 1230 kind of levels, just like minor ticks coming in on that. HDFC Bank looks to be slipping from yesterday's closing levels, 1437. That's the level that I can spot on that one. Titan has inched higher. Remember yesterday in the FAC, and this stock was pulling up in trade, so we did see some ticks coming in. Again, Titan is looking to open about 0.5% high in trade, 3,600 can be seen on that one. So those are some of the stocks. We'll keep an eye out on all of these stocks. Meanwhile, let's also welcome our other guest on the show. We have Mitesh Panchal with us on the show. Mitesh, very good morning. Good to have you with us. How do you assess the opening? What is your own sense on the Nifty and the Nifty Bank today? And then we'll come to you for your stock-specific ideas.
Good morning. So as far as Nifty and Bank Nifty is concerned, again, we have a fall in the market. So let us see where the indices are stabilizing. Right now, there is no need to go and venture into any kind of a trade, either on the buy or sell side. because since last few days, if you look at the stock specific sell-off, it is very heavy. Okay, so let us look at the fact that whether it is advisable to look at the index or whether it is advisable to look at the stocks. And we are of the view that probably indices are on the verge of a strong support because they are trading at a around the strong support. If I look at the weekly pivotal, then 21,700 is where the support one stands for as far as Nifty goes. So we are of the view that we are very close to the support areas. But important thing, as I said, is that what we are or how we are approaching this market is through an idea that where the risk reward ratio is favorable and where the strong momentum is still continuing. Okay, so this is the way how we are approaching the market. As far as index specific views are concerned, I think again we have not formed the bottom. It's a high volatility, so advisable to avoid the index right now. And let us look at the fact that where it is stabilizing. So for index there is no trade, but yes, stock specific there are trades.
Okay.
Okay. Please continue, Sakshi.
Your top two stock ideas, Mitesh, could you go ahead and tell us those?
Yeah, so if you look at the chart of a Maruti in the highly volatile market, Maruti has defended its lower end of the range. And since last 2 days, it is forming heart of high bottom formation. Yesterday's close is 11,597. So we are of the view that Maruti will sooner than later cross 12,000 and enter into 12,500 territory. So as of now, at 11,597, one can go long with a stop loss of 11,250, 11250, that is a stop loss. And your first target will be 11,800 and second target will be 12,000, which we think that can be achieved in the next 5 to 7 trading sessions. Second pick is State Bank of India. If you look at the State Bank of India chart, since last few days, stock is forming lower top, lower bottom formation, and it had a good correction from 793 odd levels. That is exactly the high which it has formed on 7th of March 2024. Since last three trading sessions, if you look at the daily chart, the trading range of 720 to 730 is acting as a very strong support. So we are of the view that the stock has formed an intermediate bottom and now the stock is ready for a relief rally. So one can go long in State Bank of India with a stop loss of 700 for a target of first target of 750 and second target of 780. So SBI stop loss 700, first target 750, second target 780.
Okay, Maruti and SBI, those are the two stocks that we will keep an eye out on as well. Varan, let me bring you in the conversation and get you to speak about some of the pharma names. Oro Pharma, of course, is 3% higher in trade today on the back of that approval for the nasal spray it has got. But is pharma looking interesting to you at this point in time? There was some sort of resilience, coming in over the last few days of a sell-off in the markets. Do you think this is the right time to start building positions in the pharma pack?
So the problem with pharma Sakshi is that there are news flows from US drug regulator, that is US FDA, not on one, but couple of companies in terms of manufacturing deficiencies, product recall, not adhering to good manufacturing practices, or in terms of some kind of procedural lapses, etc., etc. And that leads to a little bit of uncomfortable situation with respect to not only that particular stock on which the news flow is negative, but also it's kind of has its domino effect on other pharmaceutical companies. If you don't want to, I'm not saying that I mean, there are companies which are totally insulated from this shocks of US FDA regulation issue. All companies, whether it is large cap or mid cap, we've had these kind of issues on Divi's Laboratories, Dr. Reddy's. We've had these issues on Cipla, on Sun Pharma, etc., etc. And recently we heard a couple of mid cap companies suffer going through that. So I think if and not that it's going to come back the way it performed Pharma Universe during the pandemic and post-pandemic. I think stock-specific approach is rather more suitable. Mid-cap ideas in terms of investment, long-term, Zydus Life Science. We have positive coverage on Natco Pharma or Bindo Pharma, to name a few. Amongst the large cap, four big boys, Cipla, Sun Pharma, Dr. Reddy's and Divi's Laboratories. But along with this pharma universe, Sakshi, I think it is also prudent to look at healthcare facilities, names like Narayan Rudalaya, Fortis Healthcare, and Apollo Hospitals.
Okay. Right, so hospital stocks is also something that we will keep an eye out on. Let's again look at the markets. They're settling in the pre-opening trade on the Nifty. You can see just a 1/10% of a move on the upside, 21,843 currently, about 26 points higher in trade. When we look at the other stocks that are moving up, so Eicher Motors is again gaining traction, 2.8% higher in trade. You have Ultratech Cement amid that nod for Kesoram deal, about 0.8% higher. NTPC is higher. Sun Pharma, Gaurang was just discussing, is among their top favorites as far as the frontline pharma stocks are concerned, 0.7% higher in trade. Adani Enterprises, BPCL, Tata Steel, Apollo Hospitals, those are sort of stocks that are actually doing well in the pre-opening trade. Among the sectors, most sectors look to be set for a positive opening, barring, say, the financial services space and the FMCG, with just slight downticks coming in as of now. Mitesh, anything else that you are looking for in the markets today? Any particular sector or stocks that will be probably the best placed stocks to keep an eye out on?
Yes, actually, we are looking at the entire PSU basket. If you look at BHEL, Coal India, PFC, and REC, especially these four stocks, they have been beaten down quite badly in last 5 to 7 trading sessions, and now up for a very big upside. So we have the view that in these four stocks, the correction is over, and probably it's a time to slowly and gradually accumulate the stock. Because if you look at the run up of the stocks in last few quarters per se, see, when we are taking a long term view, we basically follow the quarterly and the monthly chart. So on the monthly and the quarterly chart, the structure are still bullish, and they are indicating that the current volatility is just a mild correction in these stocks, even though the correction is higher. But then, from the perspective of a quarterly and a monthly chart, we quote it as a mild correction. So yes, the trend is intact in these four stocks, that is coal, BHEL, PFC, and REC. And we are of the view that the first correction is over, and now the stock is ready for a big upside. So any of these four stocks, if it fits into your risk reward profile, you can definitely start accumulating from the current level.
Okay. Let me just toss that question to Gaurang then. Gaurang, PSU stocks, after the recent correction, any of those coming back onto your radar where you may be looking at purchasing some of the stocks again, or maybe adding?
So, Sakshi, even before the correction season, we were positive, and we always maintain that you need to have a disciplined approach in stock market, especially when the times are a little bit difficult and challenging. You don't have to kind of rush into the market thinking as if there is no tomorrow and offload all your capital in terms of basket buying. I think that's the most irrational approach to kind of start getting invested. Having said that, I think kind of correction that we've seen on the indices, uh, a little bit of more correction seeping into large cap, pain definitely there in small cap, mid cap, micro cap universe. It gives plenty of opportunities as far as investment idea in the PSU universe is concerned. Now, sectorially, whether you want to go in for defense stock, or whether you want to go in for PSU banks, or whether you want to go for power generating companies, or whether you want to go for oil marketing companies, or railway related stock, or infrastructure related stocks, our sense is that there is tremendous opportunity over here. And I'm not saying this from, like I said in my opening remarks when we started off the show, Sakshi, that it's not 2 months, 3 months. They are going to be challenging till the time we have seen sunset on 4th of June 2024 and the result known to us. It's going to be difficult, it's going to be challenging. But at the same time, I always say one thing: if you're coming to the stock market, you need to have elevated risk appetite. And when the challenges are against you, you should find opportunities in terms of investment idea, because that's the time you can get into the stock when the entire world is selling. What is the point in buying a stock when the entire world is buying? So you should try to identify opportunities for there. So we like state-run banks, we like stocks related to railways, whether it is private or public. Defense stocks, we've been always positive. Infrastructure on fallback of post the government being in place, Bharat Nirman spending. Equally dependent on this sector is the cement stock. So there is plethora of sectorial picks that you can pick from the sectors that I've just mentioned.
Okay, so PSU banks, railways, defense, infra, some of those stocks are going to be important for us, all of us to keep an eye out on. And just when the markets are about to open, Gaurang, your Cochin shipyard is again on the move. I've labeled it as your Cochin shipyard because you're the one who has talked so positively about this stock right from the start, and we've seen stupendous run up on this one. How would you look at it? 888, that's where it's going to be opening at.
So I'm going to put my money where my mouth is. I wouldn't be surprised, Sakshi, to see the levels of 1200 and 1400 on Cochin Shipyard. I'm talking about pre-split level. I
Yeah.
think the stock was split at 1400, then it settled at 700, and that's the time we spoke about it. And here the reward is. See, this is what I'm talking about, Sakshi. That you identify stock opportunities in a market like this, I think you're going to be laughing all your way back into the bank when it comes to long-term investment ideas. So rather than shying away from the market, use your head, use your graces, use your wisdoms, and try to identify opportunities.
Okay, wonderful. Markets have opened. Let's quickly look at them. 0.3% of an uptick for the Nifty, 21,880. So positive space coming in. That's a breather for all the investors who've been tired of looking at the red screen for the last few trading sessions. Nifty Bank 0.2% higher, about 96 points of gain, 46,477. That's the level at which the Nifty Bank is opening at. All the sectors, barring no, all the sectors have in fact come back into the green now, led by PSU banks that we've been discussing. Both our guests have talked about State Bank of India. So 0.8% higher in trade for this one. That's the space that's moving higher. The Nifty Auto follows. Eicher Motors is something that's the top mover on the Nifty today. 5% higher for this one. We'll come back to it. Metals are higher by about 0.7%. Realty is shining again about 1% higher. You have the broader markets also in the green. 0.7% for the small cap 100 index, mid cap 100 index about 0.6% higher. IT space also recovering 0.7% higher, oil and gas also inching higher in trade as of now. So looks good as far as the opening ticks are concerned. Top movers, Eicher Motors, BPCL, Maruti. Again, Mitesh talked about this stock, so kudos to him. 1.5% higher. That's the one. That is the one of the top movers on the Nifty today. NTPC, JSW Steel, Tata Steel. Then you also have Wipro. That's moving higher by about 1%. You have the two-wheeler stocks definitely in action. Hero Moto is now coming up. Bajaj Auto is also coming up in trade. So those are the stocks that are driving the momentum. And then you also have TCS. Let's look at that one. 4,007, about 0.7% of a move on the upside is what you see. So recovery coming in. Ultratech Cement about 0.7% higher in trade as of now too. Among the F&O movers, again you have Eicher Motors, you have Manappuram Finance, Nalco, Indus Towers, a lot of stocks to talk about with all our guests. Mitesh, first to you. How do you look at it in the opening, and where are you going to be keeping your eye out on?
Okay, so Sakshi, again, the opening is promising. Looking at the stock-specific activity, the broader market is in full charge. So let us look at the prices of different stocks for the next half an hour. It is too early to make a call, but again, as I said, if at all I have to pick up any trade after 15 or 20 minutes or half an hour, I'll be looking at purely the PSU basket. All the stocks which are in PSU and F&O. So we are looking at PSU banks, we are looking at REC PFC, we are looking at even from the metal sector, the PSU. So I think there is a whole host of a basket available within the PSU stocks, which are up for a very strong up move. And please understand one thing, that what we're talking about is just a relief rally. So this is not a trend reversal, but since the correction is steep, so we are expecting a strong bounce, which may looks like a trend reversal, but it is not a trend reversal. We'll have to wait for the 2 to 3 days of a follow-up move and to see to it that whether the momentum is continued or not. But definitely for today, with a decent risk reward, you can pick up any PSU stocks which are in FNO, and you will make good amount of money at the end of the day.
Wonderful. PSU stocks, that's where you need to keep an eye out on. Gaurang, to you. Eicher Motors, 5.5% higher. Very, very strong move coming in. 39.25 for this one. Of course, and following it is both Bajaj Auto and Hero Moto as well. How would you look at these two-wheeler stocks, which are your favorite spaces and your favorite ride as well, Eicher Motors?
So it continues to, uh, you know, give you a comfortable ride on the topmost gear. And I think you have to just leave it to the cruise control as far as enjoying the ride is concerned. You don't need to interfere with the throttle, clutch, or gear. And my sense is that, I would again go back to saying the same thing that I had said when Hero, Harley, and Bajaj Triumph unfolded their rivals to Royal Enfield motorcycles. The most of the participant on the streets were saying that now Eicher Motor is history, and that you have to bury your Royal Enfield motorcycle. And I'm laughing at them right now because the stock has not only recovered the loss that it saw when this happened, but it is also virtually close to all-time high. And possibly next week onwards, 1st of April rather, Sakshi, you will have the month-on-month sales numbers, and that will also have a very pleasing story to tell you. I am very excited about the 650 category new launches that Royal Enfield has lined up. I've seen a glimpse of it, Sakshi. It resembles the V-Rod of Harley in terms of look-wise and power-wise. It will be interesting to see what it has to tell you in terms of road activity when you actually get to sit on it and ride it.
Okay. And, Maruti, again, soaring to record high levels, 11,827, 830 right now. How would you look at Maruti at these levels, now inching closer to 12,000?
Sakshi, I always wondered why did they acted so slow in terms of EVs? And before the change of mind, I think the management kept on saying that EVs is something that we don't want to venture. When you all know what the customer is going to look for and see the change now that Maruti has taken up. It's rather late, but it's always better late than never, Sakshi. In terms of the launches and new avatars of the existing models that are there, I think it's going to be very, very interesting. And I'm always believed in one thing that you know, from asking एक लीटर पे कितना देती है, the mindset of a consumer has changed to if there is an accident, will it the car keep the driver and the passenger safe? This is the change in terms of the wisdom of a consumer. From kitna deti hai to kitna safe hai. And that's the kind of change. So when it's been one of the largest passenger vehicle manufacturing companies in India, has got very decent export market. Let me give a disclosure. We have a positive coverage on Maruti right from levels of 6,000 or even below that. And we continuously upgraded our targets. There were difficult times, there were challenging times when the stock underperformed, but look where it is right now.
Okay. One more question to you on the auto space, and then I'll toss to Mitesh again. And that is, with respect to JSW Group and MG Motors tie-up, that the joint venture may actually go live. And in fact, today again, there is going to be probably an important announcement from the group. Are you watching this tie-up closely and this joint venture closely? What would this really mean for the existing auto sector?
So before I comment on that, I think day before yesterday we had the new EV policy unfold, possibly giving it a smoother road for Tesla to come in. Yesterday there was some news item about a very sad accident in the US, and a billionaire lady had to lose her life. God knows what happened over there. There were before this, I think Shail will remember, we had some foreign names. Devu, who had come in many years back, had to wind up operations and go back to hometown. After that, you had Chevrolet winding up operations and going back home. After that, very recently, you had Ford winding up operation, went back home, and now again thinking of coming back into India. The challenges are there, but I think niche and marquee names will always remain. This supposedly talks which are going on with the JSW Group and MG. I hope it materializes for not having one more player packing up and going back. Let's have some decent competition so that consumers like you and me get benefited.
Okay. Uh, right. I'm sure Shell is also as excited as you about, what's buzzing in the entire EV space. And this he has been following up very, very closely as well. I remember Shell pointed out Electra, Greentech and KPIT and JBM Auto much earlier before the even move started on this entire space. And of course, the auto ancillary space will be interested as well. Anything else that you spotted Shell in the EV space that you would like to highlight?
I think actually the three stocks that you mentioned are doing fairly good enough. There was a bit of a correction, and I'm sure some decent buying will resurface on KPIT in particular. That's a mid-cap IT stock that's done fantastically well. So we look forward to sort of resumption on gains as far as KPIT is concerned.
Okay. Gaurang, your top stocks from the auto ancillary basket, what would those be?
Well, I was waiting for you to ask me this question, to be very honest, Sakshi. So we have, and of course, after this EV policy that came in, our conviction was with the likes of CIE Automotive and Uno Minda. And incidentally or coincidentally, after the EV policy, we had some reports from some institutional brokerage houses and brokerage houses reiterating that for this EV policy is going to be incrementally positive for two companies, not only two, but there are a couple of other companies, but the two that were mentioned under which we have coverage is Uno Minda and CIE Automotive. So it's a huge new order market for these two companies, and equally robust is the replacement market. And yesterday, I think Uno Minda introduced a new range of ORMs, that is outdoor review mirror, rear view mirror, at a very interesting price tag in terms of entry level. So I guess these two companies in terms of OEM should do well. And along with that, of course, tire companies like JK Apollo and battery manufacturing companies like Exide and Namara Raja Automotive.
Okay. CIE Auto, Uno Minda, APL Apollo, Exide Batteries. Those are some of the stocks that we will keep an eye out on as far as the auto ancillary basket is concerned. Again, getting back to the markets, it's autos all the way that's driving in the top gear. 1.1% higher. The realty space is also picking up some pace. Some recovery on some of the stocks like IB Real Estate. They are recovering about 9-10% down. They were yesterday and now about 3% higher in trade today. You have Prestige Estates, you have Mahindra Life Spaces, Sobha, Macrotech, all of them buzzing in action. DLF, Godrej Properties, those are the other stocks that are moving up. Anything in the real estate space, Gaurang? Does it interest you at large? Would you be betting on this space in, say, the next 1 to 2 years perspective?
So the universe in terms of coverage is restricted to 3 or 4 names. I don't exactly recollect. But we used to have coverage on DLF, Godrej Properties, Shobha Limited, Oberoi Realty, and Prestige Estates. But let me say this, Sakshi, I think the volatility that has been thrown at us by the market will lead to the first casualty being the real estate. Not to forget, given the kind of run up that we've seen. But like I said, when you are in the stock market, I think you should have guts of steel to withstand
that. Okay. Got that. And when you're talking about steel, a lot of steel stocks is something that I can look at that are moving in trade. So, SAIL, for example, that's up and about 1% higher in trade. Of course, JSW Tata Steel is something that I've been looking at as well. This entire space, NMDC is now moving higher, 1.8% higher for this one too. How do you see the metal prices of late, and of course the impact on the listed stocks in the metal space? Some technical moves, most of the technical guests are expecting, but fundamentally, how are you assessing this space right now, Gaurang?
We had some data point on Monday, if I'm not mistaken, from China. And honestly, I not only take anything that comes from China with a pinch of salt, but a fistful of salt. So not, I mean, and that's the reason why we had the up move coming through. Uh, I would say that domestic consumption is looking quite upbeat to me. In terms of pricing, our understanding is that you may possibly see price hikes in terms of flat and long products, HR and CR coils put together, and consumption is going to pick up slow and steadily. So both ferrous and non-ferrous is where I think we should look at opportunities, but it will not give you the moves which you see in other sectors. Quick moves I'm talking about, Sakshi. It's going to be more of a patience game with investments into metal universe. On Vedanta, we have a sell recommendation. On the buy side, we have recommendation of Tata Steel, JSPL, Hindalco, and JSW Steel.
Okay. Let me just look at one buzzing stock, and that's in news flow as well, and maybe ask Gaurang if you look at it. I mean, this is Time Technoplast. It's actually got Petroleum and Explosives Safety Organization's approval for manufacturing of high pressure type for composite cylinder for hydrogen, and this stock has soared in trade after that news flow. We did see an 8% move on an intraday basis. It did come down from that level. How would you really look at Time Technoplast? Is that a stock that you track at all?
Honestly, I have not had a view, and we don't even have a coverage, Sakshi. So I'll
Okay.
give.
Okay, fair enough. Let's look at some other stocks then that are buzzing in trade. Of course, we've discussed the OMC stocks that Gaurang already has a positive coverage on, and BPCL is now inching almost 2% higher in trade. You also have Power Grid that is moving higher. Then you also have Nestle that's moving up in trade from the FMCG pack. You have L&T that's moving in the cap space. You have Infosys, ITC, Coal India. Those are the stocks that are still buzzing in trade. Let me find some kind of a trend if I can spot. Cummins, that's up in trade 1.8% higher. After a long while, we've seen this one as well. Okay, I'm unable to point a particular trend that I can talk about, but let me discuss, Gaurang, with you specifically on the broader markets, the mid and the small caps. Which sectors would you really feel? You did talk about the mid cap IT space, and I remember the NBFC and the microfinance sectors that you feel. Where do you see overvaluation or overheating, and where would you advise extreme caution right now in the markets in the mid and small cap space?
Actually, small cap is something that I think I would possibly still wait out for some time. And I see this irrational in terms of exuberance coming through because over the last 3 weeks, before this corrections came in the small cap, mid cap, micro cap, and no cap universe, I used to get calls from our clients asking for my view on names like JP Associates, asking for my view on a company which was a one-time great carrier in India, Jet Airways, which is now defunct, and the aircrafts are lying at the bay in some part of the Delhi airport or Mumbai airport. A stock was hitting upper circuit of almost about 44 rupees, 45 rupees, up to about 48 and 49 rupees. What on earth comes over here? I mean, there's just a talk of resolution going on. There is nothing happening at ground level. In terms of numbers, you don't have anything to speak about. And yet the stock is going and hitting 5%. So some sanity had to come into the market in terms of irrational exuberance. And that's what exactly happened. So in the mid cap universe, I will still go with mid cap IT, mid cap private sector bank, mid cap public sector banks, NBFCs, microfinance companies, small finance banks. I will go with mid-cap cement names. I'll go with mid-cap autos, something like, say, maybe Ashok Leyland, maybe in the small and the mid-cap looks quite attractive. Similarly, in terms of NBFC, something like L&T Finance and Holding looks attractive. Geo Financial, Sakshi, I think it's one stock that has surprised a lot of people on the street. I think there's going to be a great story that is unfolding in Geo Financial. So that's where we have the coverage on. In terms of FMCG companies, we like names like Imami, we like names like Dabur, Marico, etc. in the mid-stroke, mid-large cap kind of universe. We are also positive on metals pack. I already listed down quite a few companies.
Yes.
Auto ancillary also I've listed down certain mid-cap companies. So there are stories in terms of investment idea, but you need to be careful what you buy.
Absolutely. You know, when we were talking about the places where you are warranting extreme caution in the small cap space, I was thinking that you will also mention Reliance Power, because there are some headlines talking about Reliance Power is going to be debt free very soon, and how it's settling very actively all the dues that are with all the lenders. How would you really look at these developments? Is it best to be ignored?
Actually, I'd forgotten about Reliance Power and Reliance Communication. I'll add one more. Good, you reminded me of those. But I don't think so. I let it happen, no, boss, bro. What is the worry? What is the hurry to get into all these stocks here? I mean, let all these things materialize. Just something which is flying in the air, not yet settled down, not yet materialized, not yet made a base at ground level. Why do you want to be the first one to go and commit a hierarchy? I mean, hierarchy over there. I mean, give it time. And there are better stocks to look at. Is it that there is nothing in the world other than Anil Ambani, Anil Dhirubhai Ambani Group? I think there are better stocks to look at.
Okay, we will take that with both hands. The advice, very sane advice coming in for all of those people who are looking at these stocks very actively. Please hold your horses at this point in time and listen to this advice, and only then move forward. What we'll do, viewers, is we'll take a very, very short break, and when we return, more stock ideas we will discuss with Gaurang on the other side, and we'll also be joined by Mitesh very shortly.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Welcome back. You're watching Market Today on Business Today Television, and I'm in conversation with both Gaurang and Mitesh has again joined after that brief power outage that he faced at his end. Mitesh, welcome back. Power space, is that the space that you're watching out for? We just discussed Reliance Power, but are there other stocks that you are keeping an eye out on, or technically you're also looking at Reliance Power after the 3% uptick that we saw today, after those news stories coming about of them settling the dues?
Yeah. First of all, Sakshi and the viewers, a sincere apology since there was a unfortunate power outage.
Not at all.
Get disconnected. Okay, from the power space, I think Tata Power is really looking promising. If you look at the chart of Tata Power, see, one thing which we'll have to understand is that when you're talking about a marathon run in any stock, probably the stock went for a correction or for a longer period of consolidation. Now, within the power space, Tata Power falls into the category of a correction and consolidation. So we are of the view that the move which has started from 250, 280 odd level is just intact. That's what I said in my opening remarks as well, that there are certain structures in which the monthly and quarterly charts are very promising, and still the structure are intact. So Tata Power fall into that category as well. And we are of the view that slowly and gradually stock will now from 450 to 500 in the next 9 to 12 months. So one can go long with a deep stop loss of 350 and can ride the trend. This is the stock within the power space which you should not miss.
Okay, so power space, Tata Power, you're big on. What else have you noticed in the interim in the markets, which I may have missed asking you? Anything, any particular stocks that you found that investors should now keep a keen eye on?
See, few capital goods company or probably manufacturing companies are looking promising at this point of time. And the two which are looking promising, first is GMM Pfaudler. If you look at the GMM Pfaudler chart, I mean, it has not performed since last 3 to 4 years, and the stock went for a very big consolidation phase. So we are of the view that at current level, looking at the risk reward, it is absolutely promising to have this in your portfolio technically. And with a deep stop loss of 11,050, if you hold these stocks, then in next 12 to 18 months, there are strong chances that stock will test around 1400 to 1600 levels. So this is one stock which is looking promising in this volatile market. The second among this is AIA Engineering. So even if you look at the chart pattern of AIA Engineering, recently after hitting 4,400 rupees of a high, the stock went for a mild correction come consolidation and now ready for a next big up move. So with a deep stop loss of 3,200, if you hold on to AIA Engineering for the next 12 to 18 months, probably we will get 4,400 and 5,000 levels. So these are the two stocks which are really looking promising, irrespective of the election result or irrespective of the market correction. And the reason is that both the stocks went for a very long consolidation phase and now ready for a very big upside.
Okay. Well, let's look at some of the other buzzing spaces as well. Indus Towers is again on the move, of course, amidst that news flow that we have discussed. Gaurang, would you have a view on Indus Towers, and would you be looking at this stock incrementally?
We have covered Sakshi as a disclosure, but the stock has overshot our targets that we had set in. So if you have your investment at lower level, you can continue to hold on. It would be interesting to see, and the stock did rally because of the news flow that we've uh, had over the weekend on in this tower. Would be interested to see how the recovery process unfolds and what is going to be the business strategy going forward from here on. So if you have old investments at lower levels, you can continue to in this tower.
Okay. Mitesh, you were not there when we were discussing about the two-wheeler stocks, especially Eicher Motors. That's also got an upgrade from a brokerage house, UBS, today, and that's why you're seeing a 5% uptake. Would you give us your next targets for Eicher, and where do you see the stock headed now?
Yeah, so Sakshi, for the disclaimer, before 1 month we have recommended this stock to our client. So our client might have a direct or indirect position in Eicher Motor. We are of the view that the second leg of the rally started in Eicher Motor, and this time it is going to be very big because the stock has spent a quality time in consolidation. And when the we'll have to understand that at what time such stocks are giving breakouts. Like for an example, where we have discussed in case of a Maruti or a GMM Fodder or EIA Engineering, these stocks are giving a confirmation of a strong uptrend at a time when the indices are at a lifetime high or near the lifetime high. So we are of the view that in Eicher Motor, the up move has just started. The way by which we have seen a marathon rally in the entire PSU basket, we will see such rally in Eicher Motor. And we are of the view that sooner than later, we are heading for 4,200 to 4,500. If you want to place a stop loss, then it is going to be a deeper. So at 36,050, 3650 should be your stop loss. And you should watch out for 4,200 and 4,500 in next 12 to 18 months.
Okay, got that. Among the banking space, it's IndusInd Bank that's now moving higher, 2% up in trade right now. And the Nifty Bank is also seeing an improvement. About 0.3% of an uptick can be seen on this one. And that's on the back of course, State Bank of India, BOB, PNB from the PSU banks, but from the private banks as well. It's IndusInd Bank, Axis Bank, IDFC, Kotak that are pulling up in trade. Gaurang, if I can ask you on the large cap private banks, which are the banks that you have on your top radar? Where do you see that investors can continue to invest in despite the underperformance? Of course, people have lost patience for 3 years of underperformance and 4 years of underperformance in some of them. So where exactly and what is the best strategy to have? Since it's very difficult, of course, the mutual funds have a large portion of it. FIs continue to invest in largely in the large private banks. So for a retail investors not to have an exposure to large private banks is something that is rather difficult. How would you advise investors to go about it?
Firstly, I would advise that make a dedicated 15-20% allocation in your portfolio towards the banking universe. And within that, depending upon your age, risk profile, and investment type horizon, bifurcate between the private sector bank and public sector banks. That's point number one. Point number two, in stock market, Sakshi, you cannot afford to lose patience. Whether it is 1 year, 2 year, 3 year, 4 year, 5 year, you need to have patience because investing in stock market is all about patience. And patience pays in stock market. And that's what I have realized in my almost more than 30 decades of uh, experience in the stock market. You can't afford to lose patience. And the sad part is you heard real time stories that I exited the stock and it started to rally. These are the stories that we've heard not once but one too many times. So in terms of preferences, large cap private sector banks, we are still putting our neck out on HDFC Bank with a target of 1900 to 2000, Axis Bank with a target of 1450 to 1500, ICICI Bank with a target of somewhere close to about 1300 to 1400, and one bank that has also been in line with HDFC Bank in terms of underperformance, that is Kotak Mahindra Bank. Over there, we have targets of about 20 to 50.
Okay, right. So those are the targets you have. Well, on that note, Gaurang, many thanks for being with us on this very special edition and sharing with us all those wonderful ideas, which we always appreciate you giving us to all our viewers. They add so much value to the viewers' insight into the markets. And we will have you back very soon on Market Today and on Business Today Television to discuss many more exciting stocks. Okay, let me now continue the conversation with Mitesh now. Mitesh, on the banking space, like Gaurang mentioned his top stocks on the large cap private banks. Do you also have your preference? Technically speaking, where are you going to be placing fresh bets?
Yeah, see, technically speaking, the best bank technically poised at this point of time is ICICI Bank. So if you look at the structure of ICICI Bank, even in this volatility, the stock has not broken below 1,000 million. So we are of the view that yes, in ICICI Bank, the up move has just started above 1,000, and with 1,020 rupees of stop loss, you can have this in your portfolio, and you can eye for 1150 to 1200 in next 3 to 6 months. We are of the view that the bank is strongly poised at this point of time and will definitely go for a heart of hard bottom formation sooner than later.
Okay, so that's as far as the banking space is concerned. Let me also address the other two segments from the interest rate sensitive basket also with you. Realty and auto both driving in a faster lane trade today. How would you look at opportunities here? Any particular stocks that you're bullish on from realty and from the auto space as well?
Yeah, from reality, DLF is looking very promising. After years of consolidation, the stock has finally come up. And if you look at the run from 500 all level, it looks like that the stock has run up very strongly in a very short period of time, but that is not the case. I mean, stock still has a strength, and we are of the view that sooner than later, stock will cross 1,000 and 1,100. So with a stop loss of 750, you can hold these stocks in your portfolio. Probably the near-term target will be 950 at 1,000. And Ashok Leyland, technically, we feel that it's a dark horse. And going forward, it will also witness a very strong upside. So as far as Ashok Leyland is concerned, we are of the view that 150 is a floor price. Below that, we don't see technically stock will move below that level. So with a stop of 150, you can go long in Ashok Leyland. Probably sooner than later, we will see a target of 180 and 200 in Ashok Leyland.
Okay, got that. Two more stocks that I want to discuss with you, Mitesh, before we thank you. One is Zomato that I discussed with Gaurang, and the other one is Paytm, both of which we got Gaurang to talk about. These stocks have been on an up move. Fourth day in a row when Paytm is on a rise. Again, a 4% move is again what we have seen in the first half an hour of trade already. This is after the recent, crash that the stock witnessed amid RBI's move on the payments bank. And of course, from last four sessions, it's been constantly moving up. Last 1 week or so, 12% of gains have come in. Would you look at Paytm favorably at this point?
Sakshi, when my clients used to ask me a question that Mitesh, it is advisable to park your money into penny stocks or a highly volatile stocks, then I just would like to say that nothing is impossible. And I quote this favorite example that on 1st of November 2008, Tesla was on the brink of a bankruptcy. And in the first week of 2021, he is the richest man of the world. So in 4,444 days, from bankruptcy to the richest person in the world. So anything is possible again in the stock market. But when you are talking about buying these stocks into your portfolio, just make sure that if you do not follow the discipline, if you do not follow the stop loss strategy, then advisable not to get into. Okay, because once the move starts on either side of the trade, it is absolutely vicious. So for my advice to the clients, as far as Paytm and Zomato is concerned, if you can maintain a strict stop loss, then you only get into this counter. Otherwise, after this correction, there are a whole host of quality stocks which are available, because the ultimate objective of investor is to make money. Then why not with quality rather than with volatility?
Okay. Then what about Zomato? Would you have a favorable view here? Again, the stock has been constantly on the up move. It's now crossed 160 odd mark. What is the next technical target that you find that investors can keep an eye on?
Technically speaking, the way by which it has moved above 152, we are of the view that the next in the current leg of a rally, if it sustains, then 175 to 182, 170, 182 are the next two targets.
Okay. Anything else that I may have missed asking you, Mitesh, that you would like to highlight in trade today? Any particular stocks or sectors that we need to keep an eye out on?
Yeah, well, thanks for asking this question. You are asking such a smart questions. I mean, at the closing of the trade, one pocket which we should not technically miss is the IT pack, because it has a very strong sell-off, and probably you can get a very quick money here with a decent target and stop loss. So today, even majority of the stocks, and you have to go for a big boys. So in lights of TCS, Wipro, and Infosys, if you can place your bets with at least 1.5% of a stop loss, you can have at least 4 to 5% of a trade in the next 3 to 4 days. So we are of the view that one should not miss technically the entire IT basket.
One should not miss technically the IT basket. The Nifty IT is now the second best performing sectoral index. 0.5% of gains can be seen on this one, and looks like all those stocks are going to come back into flavor again today. Those were the big drags for the last few trading sessions, perhaps are all set for some recovery. So you do have TCS, Infosys, HCL Technologies. You also have Tech Mahindra. Those kind of stocks that are pulling up in trade as of now. All right. Many thanks, Mitesh, for being with us and sharing these brilliant ideas with all our viewers. Of course, we do remember your State Bank of India, Maruti Suzuki as your top picks that you had suggested. And Maruti, of course, is soaring very, very sharply. Again, almost a 2.5% move, 2.6% move, 11,902, ladies and gentlemen, on Maruti Suzuki, and probably the 12,000 mark is coming in soon. Many thanks, Mitesh, for being with us on this show. And with that, we wind up this very special edition for all our viewers. We will be back very shortly, and Market Today and conversations around business and stock markets will continue. So stay tuned with us on Business Today Television.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
हिंदू धर्म में शक्ति शब्द होता है,